BOB, the bank came out with its numbers. Let's chat with the management. MD Malia, CMD of BOB joins in. Hi Mr. Malia, good morning. Your margins have expanded on a sequential basis for you, which comes as quite a positive surprise. What is the guidance that you're giving out for your NIMs for the full year?
As far as the domestic NIMs are concerned, we have been able to improve the NIMs to about 3.67% for Q2. Going forward, what we have indicated right at the beginning of the year, we would try to maintain domestic NIM, which is upward of 3.25% and an overall global NIMs of around 3%. I think that guidance stays, and we would strive to reach those levels without much of a difficulty.
I want to compliment you, Mr. Malia, on your delivery, because not only you managed to meet your guidance, you've also managed to control your NPAs. Now, for the quarter gone by, your NPAs were in and around 1%. What is your NPA guidance for this quarter and then for rest of the year?
I think we should be able to maintain the sort of the asset quality that we have seen in the past also. Consistently for the last couple of years, despite challenging conditions, the bank has been able to restrict the fresh slippages to around 1.1 to 1.25%. I think the guidance of about 1.25% on the extreme case still stands, but we have consistently done better than that. As you have indicated, second quarter on an annualized basis, 1% delinquency, I think has been a strong performance.
Mr. Malia, could you also give us the guidance in terms of what we can see from your domestic as well as international business when it comes to the margins?
See, as far as the margins are concerned, I would still say that we would be upwards of 3% as far as the global margins are concerned. Domestic margins could be in the range of 3.25 upwards. International margins could be around 1.3 upwards. I think this was the original guidance which we gave at the beginning of the year. We stand by that.
Mr. Malia, a word on your Tier 1 capital. You're growing at about 20% plus. So for how many quarters more your current Tier 1 capital will be able to support you?
See, as of now, our capital adequacy ratio is 12.73%, of which Tier 1 is about 8.82%. This does not take into account the profits made in the first 6 months, which would add to about 90 basis points. Therefore, effectively, a Tier 1 capital of around 9.72% and an overall capital adequacy ratio of about 13.60% is what we have as of September. The government would be infusing a further capital of 775 crores in the current fiscal to take their overall holding to around 58%. So with this in mind, I don't think there is any restriction as far as the growth and the capital requirement for the growth is concerned. We would still be able to meet the capital adequacy requirements very comfortably, and added to that, we have headroom to raise more capital, both Tier 1 and Tier 2. Therefore, capital is not a constraint as far as the growth aspirations are concerned.
Mr. Malia, what about your loan growth? It's been really strong this quarter, but do you expect this kind of a momentum to continue, especially when it comes to the domestic side?
The domestic loan book has grown by about 19% on a year-on-year basis. I think this is slightly above what the industry has been able to perform. Consistently, we have been slightly above the industry performance in terms of business growth. I think, therefore, if the industry were to grow about 18% in the current year, we should be able to have a growth of around 20 to 21% as far as domestic loan book is concerned. International loan book is a smaller loan book. The percentage growth there is slightly higher, about 25 to 30%. Therefore, overall for the full year, global loan book, I think should be able to grow by about 22%.
Let me split your loan book demand into two, Mr. Malia. Working capital loans and then term loans. Which category is witnessing higher growth?
As of now, we have seen growth coming from both the segments, the project loans which are extended by way of term loans and the working capital loans to the corporates and the SME segment too. But then if you look at the composition of the overall loan book, I think the term loans account for more than about 50 to 53% of the loan book. and therefore the strong growth in terms of the project finance which we have been extending. The pipeline of sanctions which we have should give adequate room for this growth of around 19% to 20%, which I'm talking about.
Mr. Malla, you also had plans for capital infusion this fiscal. How much are you expecting from the government and by when?
The 775 crores of additional capital will be infused by the government by March 12th. This would take the government holding to around 58% from the present level of 57%. So this would further improve the overall Tier 1 capital base of the bank. And as it is, we are in a comfortable position as far as the overall capital situation is concerned.
Mr. Malla, let me make an assumption here that interest rates will peak out in the next 3 months and the 10-year yield will crack below 7.5%. What happens to your treasury income in that scenario?
The treasury income has been muted in terms of the profit on sale of government securities in the recent past. I think therefore in a scenario where interest rates have been increasing, the possibility of gains as far as this segment is concerned is restricted. Therefore, this scenario is likely to continue for next few months. So therefore, if you look at the performance of the bank in the first quarter and the second quarter, the treasury income has been rather low, but then this has been offset by a very strong performance in the core fee income growth and also other income in terms of the various credit-related items on the fee income.
Right. Mr. Malla, I might sound slightly repetitive with this one, but I want to be absolutely sure on this point. Are you certain that irrespective of the interest rate regime, you will be able to protect your NPA?
The NPA has been the protection of the asset quality has been one area where the bank has been performing quite very well. This is an account of the fact that the bank has a very strong credit origination mechanism put in place, a very strong credit monitoring mechanism put in place. Therefore, this is a sort of a system which has been there for a long time, and therefore we are very, very serious in terms of ensuring that adverse selection is restricted to the minimum. Therefore, keeping that in mind, I would still say that the overall asset quality would continue to be quite robust in the days to come.
Okay, Mr. Malla, pleasure speaking with you. Thanks very much for taking time out and joining us today on ET Now, and congratulations once again on an excellent set of numbers. BOB, it's holding by about 2.6% in an otherwise somber market. The market, though, is in the mood for consolidation today.